Morning, everyone. Hoping you're having a great week. It's Thursday. Time is flying by quick. It's already October. I'm already on the second week of school for my MBA. Just had my law and ethics class yesterday. We're learning about how the legal system works and everything, and how that applies to business. And yeah, and then on Saturday I have my decision making class, stats class. So learning about flow charts and operations, how to make better decisions and everything. So yeah, I got one more year left of my MBA, and yeah, just learning a lot. And it gives me a lot of time to enjoy here, Colombia. Today I'm about to go on a hike to Tres Cruces, which is 45 minutes outside the city. So I'm excited to check that out. But today, what we're going to talk about is a financial planning tip. So we're going to talk about how a health savings account works. Uh, this uh, this could be very beneficial tax wise, depending on your situation. So basically, a, a health savings account is very tax efficient because you get a lot of tax breaks. So you're going to lower your taxable income by making contributions into it, and you can when that money is put into this account, you can choose different investments to choose from, like mutual funds, ETFs, individual stocks. You put in cash and everything. So depending on how what your health is and everything, if you don't really need to use a lot of healthcare, then a high deduct then you could use an HSA. The reason you use an HSA is because it only applies to high deductible healthcare plans. So there's three different types. There's the high deductible ones. There's the HMOs, and then there's the PPOs. The PPOs tend to give you the most flexibility, but but they also have the highest premiums because of the flexibility. So a person who's in a PPO could be spending $2,000 extra on healthcare, and if you don't use that healthcare, you still gave your premiums away. So you're kind of having like that option. But if you if your health is in good shape, and this all depends, you got to look at your situation, see like, hey, what can I do? What can I afford? What is my plan and everything? And if so, with the thing with the high deductible plans, you can get a health savings account, and all that money you put into your HSA, you could use that for future healthcare down the road. So let's say you're my age, you're 34 years old, and you don't need healthcare. Cross your fingers and everything. Um, you can fund that up until you're 65 years old. Let's say you have the max you could put in an HSA is $3,550 a year, which is probably about. Let me check the math on that real quick. How much is that per month? Divide that by 12. So it's about 295 a paycheck. Divide that by two if you get paid twice a month. It's $147. If you get paid 26 times a week, so every 2 weeks, probably like $135 or something like that. But the key thing is, like, if you don't need healthcare, like when you pay your premiums towards a PPO or an HMO, health medical organization, lower costs. The difference between a PPO and an HMO is like an HMO is kind of all in network. Like, hey, you can't go to that doctor, that specialist outside of our network. You kind of have to stay within the network. Um, so things are a little bit cheaper because the HMO is managing everything in house. The PPO offers you more flexibility in who you can see, but you pay more premiums than that. And they also tend to have lower deductibles and everything. Healthcare can be very confusing and everything, but if you don't need healthcare, like don't need to use healthcare, and you're pretty good shape, everything is good to go, you could fund uh, a high deductible healthcare plan and just fund your take all those extra premiums that you would pay into a PPO and apply to your health savings account. And the key thing with the health savings account is you don't have to take that money. It grows tax free. You get a tax break in it, so it becomes very tax advantageous. And then also, but if you don't use it for health related, if you use any of your HSA for health related, it's tax free, so you don't get taxed on any of that. If you have to use that for money for something else, then it is taxable. The key, um, but the idea is that you want to use your if it could be very beneficial to someone if they're in good health. You just got to look at the numbers to see what can I save up for and pay for. One of the biggest expenses in the future is a long-term care. Long-term care, if you have to go to a medical facility, that could be very expensive. Right now, it's about $250,000 for long-term care costs. So if you're starting in your 20s and 30s and everything, then that could really benefit you down the road long term if you could start funding that. So you got to be all part of your plan to make sure that, hey, this is the best thing for you. And nothing is guaranteed. There's trade offs and everything. Like you could be funding an HSA. But the key thing is there are limits on the deductible. So I believe the number is like $6,900 is you have to pay out of pocket costs for your high deductible plan. But then after that, everything is covered by your insurance. So let's just say you put the $3,500 in for 10 years. That's $30,000, and then you finally have that health crisis at year 10. Hey, Letitia, how you doing? But the idea is with the healthcare, so you could pay for that 1 year, pay for your costs, and then you could still be funding it, let it grow and grow and grow. This is why it's also important to have disability insurance. So, like if you can't go to work for a while, the disability insurance will help cover your income and just take care of it. So this could be a very advantageous for a lot of folks who are in pretty good shape, and you get a lot of tax benefits by putting into this for your health care and everything. I don't know where the industry of healthcare is going to go. Probably, I would guess, stay as a under that like Obamacare system where we have a bunch. Everyone has to have insurance and everything, and then and this is like I believe the same model that Germany has. Everyone has insurance, but there's different insurance companies, so they compete against each other and everything. So if that's the case, then a high deductible healthcare plan is probably still going to be in place for a very long time. That's my assumption, just based on what I read and know about the healthcare system and learn about and everything. But the idea is to get an HSA, you have to enroll in a high deductible plan. And that throws people off because they think like, oh, I'm gonna have to pay so much, but you have to look at your health situation. Like, hey, I paid $200, $300 a month for this PPO, and I didn't go to the doctor once, so I spent $3,600 to pay for this health insurance that I didn't use. But if you have a high deductible plan, let's say it's $150, then you could take that $150 that you were paying towards that you could be paying to your PPO or your HMO. It all depends. Like I'm here in Colombia, health insurance is $65 a month. And if you have an HSA, you can use that money in a different country for healthcare related costs and everything. And healthcare is pretty good here in Colombia. So I feel like I'm going to be staying here for a while. But I plan to go to Mexico in December, so I'm going to have to be on their healthcare plan and everything. Plus, I have expat health insurance as well to help me out to go to a hospital. So you just like different insurance plans to help me with my healthcare needs. But like learning about HSA, it's like, oh wow, if I don't use healthcare, then I can get on this high deductible plan. I'm paying $100 instead of $300. Take that $200. Like I don't know what the premiums are, but you take that $200, and then if that's $2,400, apply that over the next 10 years, 15 years, 30 years, depending on where you are in life. That can really help you out with a lot of healthcare costs down the road. Healthcare costs are the biggest expenses that people face in retirement, especially like it's $250,000 now, and it could be like $500,000 30 years from now. So the idea is like, hey, you want to have a plan, and and once you have a plan, you have to execute on the plan. And the key thing with plans, the more time you have to execute your plan, the better off you're going to be. And I would recommend like, hey, right now it's open enrollment season. Look at your healthcare usage and see like, okay, what is the best scenario for me? Do I need to stick with this PPO, or can I go to an HMO, or can I do a high deductible plan? Um, High deductible plan with an HSA has a lot of tax benefits. You lower your taxes by contributing to it. So like if let's say uh, you're a married couple as a household, you make $150,000 and you live in a state like Oregon, state taxes are 9%. So for every dollar you contribute to your HSA in Oregon at that rate, you're basically saving like 31 cents, 31 cents for every dollar that you contribute. So that's and then just that compounds down the road. You take that $30, you apply it to something else, apply that whatever that amount is. So just look at your health savings account, see what needs to. Right now is an open enrollment season in this time frame, so make sure you look at your situation, see like, hey, what is the best for me? What's the plan? And yeah, just take it from there. The key thing is we all live by the same tax rules, but it's up to us to take advantage of them so they don't take advantage of us. And there's a lot of different rules that we can strategy we could use to help us get the best situation possible. So hope you enjoyed today's lesson. About to go for a hike right now because today's my last day in Medellin. Tomorrow I'm going to go to another city called Pereira, which is like coffee country. So I'm going to be there for a month. Excited about that. And yeah, if you have any questions, just leave a comment. If you want to set up an appointment, just go to growwithjoe.me/start here. And we can set up a meeting to talk about your situation. I'll put that right there in the chat. So hope you enjoyed this conversation. Just look at your situation, think about it, and if you have questions, reach out to a professional like myself or do your own research. All right, take care.